Been very difficult, of course, the market going into a dire situation, the growth trajectory as well across most markets seemingly very difficult to put forward, and one can understand that things must be a little bit jittery, shall I say, as the market continues to flow through for now. Let's get into the numbers for now, and we'll unpack exactly what has happened of late and just exactly why markets are where they stand in just a bit. Red here, red there, red everywhere. Let's chat to Bright Khumalo, who is portfolio manager at Vestag Asset Management now at the JSE, joining us to unpack that market data a little bit more. Bright, thank you so much for the time, but negativity across the board, it just seems to be going from bad to worse. That global economic perspective seems to be the one that everybody is struggling to get into. Is that the only reason the markets are down right now?
Well, that's one of the reasons, but it's obviously the dominant one, and it's not helping the fact that, you know, we saw PMI numbers coming out of Germany and other European countries on Friday, and that also was looking, you know, not so good. Actually was shocking, to say the least. Everywhere, like you're saying, we're seeing markets in the Asia Pacific, markets in the US, and markets across the globe, basically, you know, taking a breather.
Yeah, where does one then look for respite? I mean, one would have hoped that scenarios out in the Western world, or shall we say the more developed markets, would have been a little bit better at this stage in time. But any jitters happening in the global market and in the more developed markets has clearly sent emerging markets as well into a little bit of a tailspin.
Well, look, when I see red on my screen, I use it as an opportunity to buy all of the good stuff that are always to buy, but the valuation went on my side, right? The same thing I did in December is what I'm going to be doing in the next couple of days. If I see something that, you know, is of good valuation, you know, there's a lot of companies in the US locally and in European markets, you know, that'll look attractive. You know, the likes of Spotify, you know, come to mind, Naspers, and, you know, all these good companies that, you know, are solid, quality blue chip businesses that are, you know, are seeing some red right now, and you know, they're showing some margin of safety. Obviously, you want to jump in when everyone is running for the door. You want to come in and actually pick up some bargains here. Yeah,
in the past, though, you could trust that there would definitely be an uptick. How sure are you now that perhaps you've either reached the trough or are headed towards the trough and will head higher?
Look, I'm quite sure because, you know, my investment horizon is the next 45, 50 years. So I'm not worried about prices today. Just like I said, I see it as a buying opportunity as a result.
Yeah. All right. Let's talk about Naspers, as you mentioned a little bit there as well. It seems things continue to happen for them. They find new and dynamic ways to forge the business ahead as well this time around. They've gone for something else that I suppose that the market didn't necessarily see coming.
Yeah, of course. The one that we didn't see coming, the prelude, was obviously the multi-choice listing here locally. The, you know, that business that's doing exceptionally well in Africa, and Africa is still a growth story, which, you know, we still believe multi-choice is going to do very well as a result. And so far, so good. That listing has gone well. And while we're still, you know, trying to understand and embrace that leg of the transaction, the second leg came out. Basically, the company says they want to list its non-African internet assets, which, you know, includes the like of Avito, OLX, and a bunch of other good, you know, Indian assets like Make My Trip, Mail.ru, even Tencent. The company wants to float 25% of those assets in the Euronext, you know, in Amsterdam in the second half of this year. We're looking forward to that. And obviously, you know, this was a gangster move because management looked at it as an opportunity and said, we want to do, you know, two things. We want to be included in all these indices that that we've been, left out, out of, for example, the Swix index. They become too big that they can't be, allocated, for example, 26% of that index, which is not good for investors, you would argue. But now that there's two different entities, this will be possible, right? And you have, shareholder value being created in the process. And why do I say it's a gangster move? Is because Amsterdam has very favorable, taxes for these companies, and obviously you want to be invested there. You want to be listed there, and you want that's where the most participants are in Europe, and that's the Euronext. That will help basically market your securities much better because there's more buyers and more sellers, which will give you the closer to the truer value of the underlying assets, where you can't get that in South Africa. The PIC, Coronation, and Ellen Gray are a big chunk of the market, and that's pretty much it. And those guys are long-term buyers; they're not, price makers. So. It's very interesting where the company is right now. We support the move for management, and we're looking for this value unlock. We can't wait.
Yeah. Is it a gangster move, however, for Aspen to have moved to A2X with regards to a secondary listing?
Look, it's less gangster, but still gangster. Again, the same answer. You want your securities to be, fairly valued. You want more, buyers and sellers to be trading in your securities, and being in more than one exchange, creates that marketability for your securities, and it's always good to see these things happen.
Yeah. All right. Let's quickly talk about Instagram then, very quickly. Online shopping, online market. Things are just utterly changing on that front, and you've seen people create pages in which you can sort of buy stuff or look to buy stuff on Instagram, and now they're doing it themselves as well. How innovative is this on their part?
Of course, Facebook has tried this before, and it ended up being, a market rather than, a place where you come, an e-commerce store where you come and buy stuff, and they keep a portion of it. So it's very different from that. And obviously, you don't want to be associated with Facebook because, that's where my grandmother is. Instagram, on the other hand, it's growing 19% per year, $100 billion US dollar valuation from a company that was bought for $1 billion in 2014. It's been a one of a kind of companies, and that's where all basically the millennials, you and I, basically hang out there, and we've been influenced by many people that I'm not going to mention here before they judge us. But like you said, I've always wanted to go to Instagram, and I see these beautiful products. I'll make an example, like a nice felt spoon, but I haven't been able to buy them directly from Instagram. And every single time I click there and it takes me to a dodgy page, I'm always like, I'm not going to be putting my credit card details into that. Yeah. And then obviously they've breached that gap into being, the sellers of the product directly. They link basically the store and us, the people that are being influenced by these ads, and these people that we follow very closely with keen interest. And the likes of Scott Galloway, my favorite professor, who's very dreamy, says basically this is like the Condé Nast of today, or the Vogue of today. But the difference is they serve you ads that you actually want to see, and they give you products that you want. It's not stuff that is frivolous and it has nothing to do with you. It's something that you actually they have cookies around you, and these cookies follow you everywhere you go. So they give you the stuff that you actually want and think about all the time.
All you have to do is just accept those cookies, that's for sure, right? Appreciate your time. And when you say influence on Instagram, look, I follow you, so you've been the one who's influenced me in some way or other. But anyway, we'll have a chat about that another time. Thank you so much for the time. Bright Khumalo, Portfolio Manager at Vestact Asset Management. More news coming up right after the short break, of course. Do stay tuned. This is